For those of you out there either thinking of buying your first investment or getting back into the market at the moment, this is a really short, sharp video for you guys to wrap your head around it. Now, in this one, we're going to talk about what to buy, where to buy, how to get started, and how you can absolutely make the most out of your next 30 days to put yourself in a much better position from a market perspective, from a knowledge perspective, and start to overcome some of those fears and challenges that you're dealing with getting back into the market at this time. Now, if you're just getting started, the first thing you need is a plan or a strategy. Now, you can sit down and you can figure that out yourself, or you can book in a time with us over at Pumped On Property just by clicking www.pumpedonproperty.com and clicking the free strategy session link, where either myself or my brother Simon will sit down with you and talk about where you are today and where you'd like to be in the future. But if you want to do it on your own at home, it's so simple. The first thing you do is you start with looking objectively at where you are right now. And that means, what are you earning? What does your savings look like? How much are you saving per week? And what does your borrowing capacity look like? That sets you up, because if you're in a position without any savings, without a weekly savings goal or plan, or you don't currently have a pre-approval in place, then they are the things you need to do. But if you're sitting at home like so many of the people that book sessions with us are, with good equity or good cash in the bank, then the starting point is really getting real with what can you borrow, and a mortgage broker or a bank manager should be able to tell you that. Otherwise, you can jump online and get a rough idea of what your capacity looks like. Now, the important thing about understanding your capacity is it gives you a filter or a focus to get started. Now, for some of you out there, you might be able to borrow $5 million. For other people out there, $300,000 will be your absolutely max at the moment. The thing I used to do as an investor, and I used to spin my wheels and waste so much time, was looking at properties that were outside of my budget, or looking at properties that were too cheap, because I wanted to be a tight ass and I wanted to save myself some money, and that cost me really good long-term gains because I wasn't buying quality stuff in the right areas at the right time. Now, once you know where you are, you really need to know where you're going. Now, that's twofold. The first thing is to look at where you would like to be 12 months from now. Now, I like to look at my entire life. For me and my wife in the next 12 months, I'd like to finish the couple of projects I'm doing at the moment, and I'd potentially like to start one more, if not two. Over the next 12 months, I'd like to spend more time with my family doing meaningful stuff, a little bit more holidays, a little more weekends away, a little bit more sort of dropping and picking up the kids from school. From a business perspective, I'd like to consistently help great people buy really high quality properties. Now, that's pretty simple, and that's about as hard as it gets for me personally. I'd also like to pay off a little bit more of my debt over that period of time. In the future, even clearer, I want a life filled with choices. 15 years from now, 5 years from now, I want a passive income stream for life from my properties outside of my business that gives me over 6 figures a year of income. So if I decide that I don't want to do this anymore, or I want to do something different in the future, or for those of you out there working for other people, maybe you want to start your own thing, maybe you don't want to work as hard, maybe you want to spend more time with your kids or volunteer or travel or whatever it is for you, get a line in the sand point. Now, the goal should always be financial freedom. If you don't have a dollar figure, it should be to replace your current annual salary as it stands right now, so you can live the current lifestyle you have without needing to go to work 30 to 50 hours a week like the rest of us. Now, once you understand where you want to be in the future, what's actually holding you back is the third question you have to ask when planning, and being open and honest about that. For me, questions come up like, is it the right time to buy a property? Where should I buy? What should I buy? How much should I spend? Do I have the right mentor or team of advisors around me? Do I have the right coach? Do I have the right plan? Is the market freaking me out at the moment? And is it even the right time to buy a property anywhere? Which market should I target? Which suburb should I target? What type of asset should I buy? And we'll talk about those things in the other parts later in the video today. And then once you've got your list of things that are holding you back, or that are giving you grief, or that are creating challenges or fear for you to take action, then we want to have a really clear property plan. So what does the right asset look like? How much should you spend? Which street should it be in? Which suburb should it be in? How big should the land be? How big should the home be? How many bedrooms, bathrooms? Should it be a unit, a townhouse? And once we get to a point where we know where we are, where we're going, what's holding us back, and exactly what the next property looks like, all of the fear, all of the challenges, all of the questions, all of the uncertainty fades away, and you can confidently step towards your dream of financial freedom, choices, and passive income in your future. Now, once you've got the right plan in place, you need the right team. For me and my clients, I obviously am a buyer's agent, and I help people get that plan in place, educate them on the market, help them buy the best quality asset at the best price, introduce them to a great team, and then help them in the future if they need introductions to builders or granny flat guys or renovation guys. Now, for those of you who don't have those relationships, realistically, you need a solicitor, an accountant, sometimes a financial advisor, a buyer's agent for some of you, a town planner, a building certifier, property manager, a builder, a granny flat builder, a renovation guy, and probably a couple of engineers just thrown in there for fun. Now, they are the people that we introduce clients to, but they are the people that you need to become a successful long-term investor. The key question on top of a mortgage broker that you need to ask all of those people is, what the hell are they doing personally? How many properties have they bought? How many investments do they own? How close to financial freedom are they? What's their strategy, and does it align with yours? You are only as strong as your weakest team member. And I've worked with some weak ass people over the last 10 years as an investor, which is why now every single person I have around me either is completely financially free or well on the way to financial freedom, and they're either living like a baller because that's them, or they're just living the simplest life with choices, which is more in line with my values, having 3 young kids at home. Having the right plan, having the right team is absolutely vital and the first step. Now, once we get past that first step, we really want to focus on what to buy. Now, that comes down to a few simple rules. Houses have outperformed units in Australia, according to CoreLogic, in the last literally 25 years by 96%. So I always buy houses. I always buy a big piece of land, the bigger the better. I always buy near education, hospitals, infrastructure, great quality schools, train stations. I want to buy in the quality part of a city. So let's say that you're looking to invest in Melbourne. We all know that eastern Melbourne and the beachside suburbs is where it's at, but a lot of people can't afford that, which is why they go closer to the city. And then some of those people choose to go to West or North Melbourne, which if you're close to the city's okay and long term will be fine, but I think you can do better. It's the same with Sydney. In Sydney, you know, North Sydney, Eastern Sydney, Sydney Centre, and the southern side of Sydney is where it's at. You sort of want to, if you can, you know, make decisions to buy in line with the better quality parts of the city. Same in Brisbane, northern side close to the city or the beaches, same with the southern side, or eastern Brisbane is beautiful, Brisbane Central in the city is also beautiful. And I'm sure it's the same with Perth and Adelaide and every other market in Australia. So identify the best part of the city, identify the city that you want to be focusing on, then reduce it down to one suburb and buy the best part of that suburb, the best street, nice quiet street, you know, none of that stuff that you wouldn't want to live on with your family for the next 20 years. Check the bushfire stuff, check the flooding stuff, check the mining stuff, you know, really do your due diligence, make sure it's the absolute right property. Now, for me, the right property looks like a low maintenance, tenant ready, high quality 3 or 4 bedroom home that's a little bit larger than most of the properties in the area, just because again, if you go for what the mums and dads want, you'll get a better rent, and I'll also get a better valuation or resale in the future. The last thing is looking at where to buy. So where to buy for me is super simple. Metro markets or major regional markets. Now, CoreLogic again did a study in the last 20 years where they looked at the 7 biggest metro markets versus the regional markets in Australia. And the metro markets have done 86% better than the regional markets over time. Now, sure, you could pick the winner like Byron Bay or Northern New South Wales or the Central Coast or, you know, Newcastle or Wollongong or Geelong, and you might be that lucky person that buys that regional market and knocked it out of the park because you nailed the timing. But for those of you that don't want to try and beat the house, that just want long-term capital growth, great cash flow, then focus on those metro markets because the history has said that they are the ones that win. Without you having to choose 1 out of 40,000 regional areas, you know, just choosing 1 out of 7 capital cities seems a lot easier to me. especially when you know a bit about each of them. Obviously, Michael Matusik did some great research as well. He found that properties closer to the city within 20 Ks generally outperform properties further away in terms of capital growth. Although again, there's examples of this in Sydney, Melbourne and Brisbane where places further away are worth more. But over time, without some sort of incredible location benefit like being on the beach, the closer to the city generally wins. And then we want to be, again, in the quality part of the area, quality part of the suburb, quality part of the street, surrounded by mums and dads. So that's sort of like a really quick dump. Get the right plan, get the right team, focus on quality houses on nice big blocks of land, focus on quality metro markets close to the city or close walking distance to the beach if you can afford it, and just follow these rules, because these rules have been in place in Australia for 100 years, and it's the location benefit. If you step away from all of that and just go, what would I love to live in the future for my dream lifestyle and my family? Chances are that other people are going to want to live there because of the schools, the shops, the jobs, the infrastructure, the transport, the lifestyle, the beaches, the city. And, start getting serious about this stuff. Now, I didn't really get serious about this stuff until I'd bought about my 5th or 6th property. And then I started to realize the mistakes that I'd been making by not following history, not understanding history, and not understanding what works. So there's so much good information out there for you guys to follow, for you guys to check out. I hope this video has been valuable. Please subscribe, please give us a thumbs up for this video. Please share this with someone who's looking to get started that just needs some tips and tricks. For those of you thinking about buying an investment but still have questions this year, please book a strategy session over at www.pumpedonproperty.com. Let's talk about where you are, where you would like to be, and the market as it stands now. And then you can go off and either smash it on your own with some different ideas, or maybe you can become one of the small number of people we work with each month. But either way, we wish you all the best. And as always, stay safe and invest or learn to invest with confidence.